Well, happy Monday. I'm Marlon Bowling with you, your tour guide to the ag commodities, and happy National Agriculture Week and happy spring. My goodness, we got all kinds of stuff starting out here this week. It's going to be a full adventurous week, and the markets were not too shabby overnight either. So I want to review what took place in our Globex trade. I want to remind you also, I checked the wires this morning. I did not see any overnight export sales reported, at least over the weekend. So kind of quiet on that front. However, we had a little bit of a bullish tone in the overnight trade. Let's take a look at our prices. We'll start here with the corn. And overnight, we had the May corn up 8 3/4 cents. We were at 7.50 per bushel. And we have July 10 1/4 higher at 7.22 3/4. And if you look at that new crop December contract, it is 10 3/4 higher at 6.56 1/4. It would be off of its overnight high by roughly about 4 cents or so. Now let's switch over to our soybeans with our quotes provided by bar chart here, and we have the May contract 15 1/4 higher at 16.83 1/4. That would put us about 7.5 cents off of our overnight high. July up 18 1/4. New crop November soybeans 12 higher at 14.78 3/4. On the wheat in Chicago, we'll start there first. On the May contract, 30.5 higher at 10.94 1/4. It actually got as high as 11.01 overnight. July new crop is up 28 3/4 at 10.73.5. You know, that's off our overnight low by 32 cents and some change. Goodness. Okay, on the Kansas City wheat. This is your hard red winter wheat. You had the May 30.5 higher overnight at 11.01. And we had July 28 3/4 higher at 10.90 3/4. And now on to Minneapolis spring wheat trade. We had the May contract there, 15.5 higher at 10.75 3/4. And you had July finishing up the overnight session 16 3/4 higher at 10.71.5. Let's bring in Brian Hoops of Midwest Market Solutions and discuss, shall we? Definitely a higher tone everywhere you look in the overnight trade here. Brian, what is the trade going to be looking at here as we start out a brand new trading week?
Hey, good morning, Marlon. Yeah, we've seen some higher prices overnight. I think part of this is the fact that crude oil is able to recover. We're about $4 higher overnight right now. And so you don't have that spillover selling out of the crude oil markets or that margin call type selling that would limit some of the upside for corn, soybeans into the wheat market. And we're seeing, a little premium being put into values because of that and because of what's going on across the seas with Ukraine and Russia. So there's still a lot of concerns about what's happening over there and the ability of not only those two countries to export grain products, but also to grow winter wheat and then get it harvested and exported, as well as planting corn this spring. So there's a lot of premium being put into the market as a result. Argentina did raise their export taxes on soybean meal and oil by 2% over the weekend. That was pretty much expected, but that will slow some of their export business, and that will be effective through the end of the year. And it's hoped that the U.S. would get some of this business. So again, more premium being placed into the market as a result. And here in the winter wheat plains, wheat's coming out of dormancy. Grass and the wheat is starting to green up as we expect to see some rain this week. That's going to help that crop out quite a bit. So you may see a stabilization in these winter wheat crops, which have ratings have been falling so much recently. But as we start to go into late March and early April, crop is likely to stabilize and actually improve a little bit.
I see on the news wires where it looks like Brazilian soybean harvest is now past the 2/3 completion rate, and it was hampered by some rains over the weekend. So that bears watching this week. All right, Brian, we'll come back in a moment and we'll talk about the setup for our livestock trade right after this.
Yes, we are in June for both of those.
Here's a quick peek at some of the outside markets overnight, just to get you up to date on the Dow Jones Industrial Average. We have now rolled out into June, and the June futures are 42 points lower at 34,591. So that's how things are looking there this morning. If you look at the U.S. dollar index, pretty flat. June futures are 53 points higher at 98.280. So not a lot going on right there. On the West Texas Intermediate crude market this morning, well, that thing's getting a little hot under the collar. We have the April contract, $4.05 higher at 108.75. So there it goes again. All the contracts on the crude oil there are at least $3 to over $4 higher. All right, now just to review where we finished up last week on our livestock trade, let's begin with our live cattle. Our quotes are from Bar Chart. April live cattle were up $1.02 Friday at 140.50 per hundredweight, and the nearbys were leading the way higher. Feeders on Friday, we had the April contract $1.22 higher at 162.32. The lead month, or the most active month to the upside, was the May, up $1.57 then. And on lean hogs last Friday, we had the April contract 95 cents lower at 99.40. Let's go back to Brian Hoops and talk about this. So the cash cattle trade, as far as what I could tell last week, Brian, seemed to be pretty steady. Maybe some dress basis sales late in the week were a little bit firmer than the week before. What do you see happening for a trend on the cash market this week?
Yeah, well, right now we're called steady to higher for the cash market. This is kind of the same call we saw last week. It was a disappointment in the southern trade, only at 138. That was steady with the prior week, but looking again steady to maybe that $1 to $2 higher, getting up in the 140 range as a factor margin starting to improve with the bottom in the box beef values. The weekly slaughter last week came in at 644,000 head. That was unchanged from the prior week, but well above year-ago levels, which were about 629,000 head. So, we can get slaughter pace to the 650, it's going to show that the packers have much bigger needs, and we could see that jump in the cash market. So we're kind of right on the verge there where we would expect to see steady, maybe $1 or $2 higher again this week. I think the futures market rallied on Friday, kind of anticipating or putting a premium in that we are going to see trade in that 140 range or maybe a little bit above this week, based off of some of the tightening numbers and this box beef trying to move higher.
Well, we'll see if that comes to fruition or not. Thanks, Brian, for the update this morning. Brian Hoops of Midwest Market Solutions are about ready to get underway here for a new trading week. Janet, I'll turn it back to you.